read through the risk disclaimer, and we should be ready to start. Okay, let's move on. So what we're going to be looking today. Zod was saying, hi Luke, I hope you're great. That's NFP YouTube video was great. Thank you so much. Not a problem. Always good to have, positive feedbacks. Did you guys found it to be easy, or how hard it was, in a sense? Everything was cool. Hope it was easy to understand. All right. So what we're going to be looking today, I've separated two topics, keeping simple and short, so we don't lose much time hovering around, and get to the chart as soon as possible. So first thing is, what will happen if Trump or Kamala Harris wins the election? So I've done a video on that, but I will do a little bit more in-depth analysis today. So what would happen if Trump wins the elections, and what would happen if Kamala wins the elections? By the way, I just want to make very clear here, I'm not taking any side. I'm not taking side of Trump, or I'm not taking side of Kamala. Any idea or anything I express towards this is purely fundamental. It's purely explanation, and it's purely a speculation towards who's going to win and what would happen with the market. Okay. We had a higher CPI, and will a higher CPI makes a stronger US dollar? So that's the question we have to ask ourselves. And with this higher CPI, what would be the contingents of the FOMC? What would happen on the next meeting? That's going to be on the 7th of November. That is next month. So yeah, there is definitely some good trade opportunities popping up in the market at the moment, especially around the US dollar as well. Gold. So we will have a look on those as soon as possible. Let me just take off this thing. I don't know how to do this. So I'm not that good with Zoom. Gosh. Wait a minute, guys, just a second. Let me just do 1 minute, because I was selecting the wrong screen. So yeah, all good now. Perfect. All right, let's go. So just take off this. Let's first of all have a look at the week ahead and what we have for the week ahead into the economic calendar. We don't have much things happening this week, actually, but it's always good to have a look at it. I don't want to know what is the low volatility. I just want to know what's medium and high volatility. Everyone can hear me fine. Everyone can listen. Everyone can see my screen. Hopefully everything it's all good. Okay, so on Sunday we had some China reporting, balance of trading, etc., but not much happening. Chinese market is still dropping quite a fair bit. Let me just take China 50. China 50. Yeah, we've seen right here, Chinese market is still dropping after rising 40%. It's pretty much 50% already decline. Yeah, or more than 50%. So more than 20% already off the whole move. So sorry, more than 50% of the whole move that was 40% up is now down. So consecutively 20% down since the top at 16,283. Now it's trading at 13,500 pretty much. So really not great for China over there. Okay, Now, Tuesday, today we just had the Germany wholesale prices, month over month and year over year, not looking great. Was expected to be 1.9%. It came up to be negative 1.6%. And the month over month was expected to be 0.2%, and it was negative 0.3%. So really not great. This is fulfilling the move right now on euro downside. If we look here, just take this off, euro dollar, there we go. We can see that there is some sort of speculation in the market right now. We've seen this 50-minute candle driving down, so some momentum happening around after this news. UK unemployment rate is better than expected. Was expected to be 4.1%, pretty much similar to the USA. USA 4.1, 4.2% now, and United Kingdom unemployment rate for the month of August came up to be 4%. So this is probably driving pound up. Let's have a look. GBP. That is correct. So, you know, some pressure to the upside and now coming back to the downside. We will still have tonight at 8 p.m. This is Australia time. We have Germany's Zero Economic Sentiment Index for the month of October, expected to be at 10 from the previous of 3.6%. So that is pretty good. Later on, we have inflation rate year over year, as well as month over month for Canada. And that would be it for today. You know, Canada has been controlling pretty well inflation there, 1.8% right now from the previous of 2%. So pretty good. Wednesday, we don't have much except for UK inflation rate, 5 p.m. So tomorrow, 1.9% as an expectation from 2.2% previously. So, you know, coming back lower. But this is not the core inflation, because the core inflation is still above 2% at 3.6%, and now expected to be at 3.4. So as I always say, what the central bank prefers to look at is the core inflation and not the normal inflation, because the core inflation excludes the food and energy prices. That is the most volatile items on the basket that they do the consumer price index. So really up to see how the market is going to take these this data. Later on Thursday, it's you know, it's the volatile day. It's what every participant on the market is eagerly expecting for the deposit facility rate from ECB, you know, inflation rate as well. And of course, the press conference. It will be really, really interesting to see what Lagarde has to say regarding the monetary policy that they will implement in this last quarter of 2024 and, you know, for the 2025 year as well. So we've seen here at the moment that the inflation rate year over year is expected to be at 1.8%. Below the 2%, that is the inflation target. So that is pretty amazing, damn good. From the previous of 2.2%, so it's still 0.2% higher. Now 0.4 lowering from the previous, so that's pretty good. But what actually will matter will be the interest rates decision. There are expectations for a 25 basis point cut. So yes, this can probably weaken the euro even more. But what the market will be probably looking at forward will be the press conference. Because if we look at the Europe bonds, all right, it has been priced in already. Okay, so if we look at it, this is a 4-hour chart. Since pretty much beginning of September, we can see a huge drop, and then from October now to the mid of October, we saw a recovery of this drop. So we were trading in September. What was this? Beginning of September, we were trading at 2.4%, 2.40, and now we're trading at 2.23. So pretty much a 17%, 0.17% drop. Still doable, okay. Still very, very doable. I reckon we can probably price in a 25 basis points cut. I will be very surprised if they don't cut. Another reason why they should and they can is, of course, the inflation coming back to target. So that's pretty good. Okay. Then on Friday, we don't have much happening. We have only China retail sales. Oh, of course, I forgot the retail sales from USA on Friday, on Thursday as well. We have expected to be higher from the previous. 0.1% was the previous, and now the expectations at 0.3%. So, you know, probably a little growth into the retail sales, because I've explained this last time. But when we have a higher NFP, a higher PMI, a higher average hourly earnings, people have more money to spend. And if population have more money to spend, they will spend, all right? They won't probably save that money. They will probably go and spend, especially on USA, a very consumist country, a very you know, capitalist country, that they want to go for it, and they go for it. So yes, most probably we will have a higher retail sales. I will be pretty surprised as well if they come to lower. And of course, a higher retail sales indicates more sales on the retail side. So if we see extravagant numbers such as more than 0.3%, we could be pointing to a higher inflation in the next reading. Okay, so that would be really interesting. All right. Let me just move my camera so you guys can, when I talk to everyone, you guys can see me. Perfect. All right. On Friday, yeah, as I say, we don't have much. We only have China retail sales and the GDP growth as well. Expected to have a bit of a contraction on the GDP from 4.7% to 4.5%, and a bit of expenditure on the retail sales from 2.1% to 2.4%. Okay, so that would be pretty much it from the economic calendar. So now, something very interesting I want to show everyone is poly market presidential election betting, right? I didn't even knew that was such a thing, but apparently it is. And if we looked at, second, is still loading. I think my internet connection is not that great. There it goes. Wait a minute. Okay, perfect. All right. So pretty much we have Kamala Harris with 44% of chances of winning, and Donald Trump with 55.5% of chances of winning. Okay. Yes, if we do the maths here, it's 0.5% missing somewhere. So I'm not going to say it's from Kamala Harris, or I'm not going to say if it's for Donald Trump, because if we give him another 0.5%, he's going to go for 56, sorry, and Kamala will be at 44. So yes, if we continue to see those numbers, we may like to see US dollar stronger. We can see on the DXY right now, we've seen more than 8 days in a row closing higher after high. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days pretty much closing positive, right? I do expect it continue to trade in higher. So I do expect a strength coming from the US dollar, appreciation from the US dollar. So most likely 204, 300. that would be my level of target for the US dollar index. And this, of course, leads as well in some sense, because of the Donald Trump is ahead of the pool. So he is ahead of, people thinking that, yes, there is a possibility of Donald Trump actually getting the elections. And if they do get the elections, it will be more positive to the currency. So therefore, they already, let's say, putting the bets on and already starting to buy US dollars. So then when it comes the election, they don't get much the volatility because they already position it on the market. Okay. So there is maybe a sense. Okay. Of course, if we look to, let me take all of these drawings. If we look to the US dollar index on a 4-hour chart and we try to add US 10 years or US 2 years, sorry. Okay. We can see the correlation is, of course, very correlated, and we can continue to see more strength coming from the actual US 2 years, all right? Even the US 10 years, okay, if we look to the US 10 years, let me just put this in line chart, it's better so everyone can see. So in blue, we have US dollar index, in purple, we have US dollar 10, and in pink, we have US 2 years. And we can see that there is some sort of correlation between the DXY, right? Of course, because DXY is basically a basket, and we all know this, composed by majority of euro, and then pound, Japanese yen, etc., etc. But yes, of course, the yielding on the bonds will have some impact into the currency. All right, more yielding, stronger currency, yielding falling, weaker currency. That leads to a higher interest rates or lower interest rates. And we're seeing the probability of this continuation to the uptrend here. Everything is pointing up towards now, at least. Okay. Another reason why US dollar is going up, of course, is a safe haven, as it always been. And another reason as well is the China market going down. Okay. Now, the big question happened. The big question comes in, right? So what would happen if Trump wins the elections, and what would happen if Kamala Harris wins the election? And I want to ask this question to everyone here. What do you guys think would happen if Trump wins the election? It would be strengthening the US dollar, it would be weakening the US dollar, or what would happen with Kamala Harris? To would say strengthening US dollar for Trump, so basically weakening US dollar for Kamala Harris. Anyone else? No, okay, that's fine. Let's move on then. Okay, so there are some potential impacts, okay, for the presidential election. Santi say, as a research on the result day, dollar gets stronger. Yeah, it could be. If Trump wins, we'll make dollar stronger. Okay, Zodwa, cool. Okay. Oh, there's some names I haven't seen here. Maurice Ribbon, welcome, Maurice Ribbon. Yeah, that's the only one I haven't seen here before. So very good to have you here, mate. Welcome. All right. So if Trump maintains his current momentum as we've seen right now, okay, at 55.6%, just updated at the moment, several economic factors would tie to his policy, policy preferences, could result on a stronger dollar. Yes, all right. And I've listed some of those today. And if you want, you can note it down. So the first one is his very, very pro-business policies. Okay, he likes business. He's pro business, and he wants to help minor, smaller, medium, bigger business to get the most of it. Second, he focus on the domestic manufacturing. Third, he's very strategic when it comes to geopolitical instances. And fourth, but not least, he's very, the market sees stability onto his administration. As we've seen, Biden at the moment, not much stable. Well, come on, Harris, not much stable economic growth and inflation, and all over the places. As of Trump, once we had Trump, it was more stable. So the market looks at it into a more stability way. Okay. Now, so the first thing was, pro-business policy. So one of the hallmarks of Trump's first term was his administration focused on the tax cuts, deregulation, business-friendly policies, because this will stimulate domestic economic growth. These types of policies, they're very well received by the market, and will lead to a bullish outlook on US assets. So if Trump were to return the office, most likely we would adopt similar approaches. So we haven't heard, I haven't actually had time to look at his proposals, but if I'm not wrong, I think a week or a week and a half ago, he released his proposals, but I haven't had time to look at it. But if Trump gets back into to the chair, let's say, he most likely would be looking to those similar approaches, with emphasis on reducing corporate taxes and minimizing federal regulations. This, of course, would lead to US business more competitive on the global stage. Thereby, it will increase the investors' confidence as well as the inflows into the US markets. And as well as stronger economy often correlates with a rising demand for the US dollar, because investors will like to buy into the US stocks, bonds, and any other financial assets. So this is the pretty much first thing why I believe it would make a stronger US dollar. The second part is that he's very focused on domestic manufacturing. So as he always say, the American first economic thing, he always states, let's make America great again, let's make America first, etc., etc. So it strongly advocate from reassuring of manufacturing jobs, aiming to reduce US reliance on foreign imports. He always say the same thing, we want to make our own things, we don't want to rely on foreign imports. So if Trump continues to this focus on the domestic industry into his campaign, for the next probably less than 3 weeks, because we have less than a month, it may reinforce the demand for US-made goods and services. And of course, once you have those policies can promote domestic production, this will often lead to a decreased trade deficits and a greater demand for the US dollar into global market. So, for instance, a reduction into the imports, it will reduce, it may reduce the need to purchase foreign currencies, right? Because if you're making your own things inside your own country, then you don't need to go outsource these from other countries. So your BOP, so your balance of payment, buying other currencies, strengthening other currencies, wouldn't need to happen. Again, another positive point to a US dollar bullish momentum. Okay. Third point is the geopolitical strategy. Trump's presidency was characterized to a very robust stance on the trade negotiations. Right, it was often marked by the tariffs and the protectionist measures that he always talks about. So, while those policies sometimes result in a short-term volatility, we had some trade tensions with the China market that they were aimed at rebalancing the trade relationship to favor the US. if Trump gets re-elected, he will probably pursue a similar strategy to reduce dependency onto the foreign economies. A more balanced trade environment coupled with a protectionist policies would most likely enhance the US economy, and then this will position relatively to other countries. So this could eventually lead to another appreciation on the US dollar. And you know, moreover, Trump's assertive foreign policy is occasionally destabilizing in the short term. It probably foster a long-term market stability if it perceived to enhance the US economy. Okay, so that's the only one thing. He actually needs to maintain this into his speech by next month, 5th of next month, 5th of November. And last but not least is the market stability perception, right? As I don't need to extend myself much on it, but you know, the market in itself, it tends to favor continuity and predictability, because unexpected changes can introduce uncertainty and therefore often drives investors towards safer assets like the gold, or even other currencies like CHF. Well, not much Japanese yen at the moment, but yeah, most likely CHF and gold would be, yeah, the safest next year, in my opinion. So having already served a term as Trump did, I think Trump represents a non-quantity, all right? Lots of investors around the world may view his potential re-election as a continuation of a very familiar policy, reducing the level of uncertainty around the market, as well as the volatility that often comes in with the change in the leadership. Okay, so of course, again, the stability could lead to a demand of the US dollar as well. Okay, now this, I've said everything here. It's pretty much my reasons why Trump would make the US dollar stronger. Okay, now we have the other hand, Kamala Harris, that is 44% at the moment. So if Kamala Harris comes in and she actually, you know, gets to the podium, if she actually gets elected, it would be very different economic priorities. So she has a very, very different, it's pretty much, you know, I didn't want to mention that, it's pretty much left and right here. Okay, so Trump more to right, Kamala Harris more to left. So they have different views, they have different eyes into the economy and etc. So it will be very, very different economic priorities, so which it might have a varying impact on the US dollar. So she is the vice president of Biden. Okay, hopefully you guys know that. So Harris is associated with a more progressive policy, all right, that will emphasize social equity, ES, that it's environmental sustainability. She will most likely try to expand government programs, you know, healthcare reform, green energy initiatives, etc. So while those policies may drive the long-term economic benefits in terms of, you know, addressing it, income inequality or trying to fostering sustainability industry, they may not have the immediate pro-business appeal that typically it's what the financial market is looking for. It's what the investors is looking for. This is what will make the confidence into the investors into the short term. Okay. Yes, I'm not saying this won't drag any volatility into the market. This will probably bring a lot of volatility into the market for both sides, right? Even Donald Trump or even Kamala Harris. So let's say, for example, a progressive reforms often will involve higher taxes on corporations and wealthier individuals because they need to fund those programs, those initiatives, okay, which can sometimes dampen the market enthusiasm. So particularly among business and investors who prioritize profitability. So additionally, if Harris were to pursue policies that made a greater government intervention in the economy, some market participants might perceive this as creating more regulatory burdens for business. So potentially slowing the economic growth and weakening the dollar in the short term. Okay. So putting all together in a very quick summary here, I don't want to extend myself too much into that because we have to talk about the CPI still. It's very tricky to say Trump will win or Kamala Harris will win. But the data is pretty much suggesting at the moment, Donald Trump holds a slightly edge over Kamala Harris with 55.6% of chance of winning. If Trump should win, markets may respond favorably, most likely anticipating a return to pro-business policies, increased domestic manufacturing, and a more protectionist geopolitical strategy, all of which could boost the US dollar. If, on the other hand, Kamala Harris comes into a victory, this would bring progressive reforms. These may not have been the same immediate appeal for investors that look for rapid economic growth, and may not strengthen the dollar to the same degree. So we still have some time ahead, some time away. The situation remains very fluid. The market predictions are likely to shift because some new developments may arise. However, at present, this is what we have. This is what the market sentiment appears to be betting on: a stronger US dollar under potential Trump's presidency. So hope you guys could understand around this sense. Any questions regarding this? So good. Can we move on? No questions? Okay. Okay, so no. My next, I could have left it open, but I didn't. But my next point is stronger USA inflation, right? So let's have a look at the USA CPI here and on the BLS, Bureau of Labor Statistics. So we consider the latest numbers have been 0.2% for the consumer price index in the month of September. Where is my release chart? There we go. Very interesting, this first chart, right? The 12-month percentage change in the CPI for selected categories for the month of September, not seasonally adjusted. We've seen an increase in all items, an increase in food, a decrease in energy, more than 5% decrease in energy, and all items less food and energy, an increase in that as well. Really, really interesting. The 1 month percentage change has been up, and this is the year to year. So we've seen 0.2%, 0.2%, 0.2%, and then negative 0.1%, and then break even 0.0% since May 2024. So we've had 5 releases, pretty much no changes. Okay, we haven't seen anything ups or down. Now, this of course is attributed to shelter prices, as well as energy, as well as food, and I think forgot which one it was, the last one, but anyways, these are the biggest ones that we have to always pay attention at. Now, with the higher CPI, before the CPI release, we had a pretty interesting priced in 50 basis points cut from the Fed for the month of November. Okay, just remembering here, the Fed has a meeting on the 7th of November. That is 2 days after the actual US election on the 5th of November. So that's very convenient for them to cut the 25 basis point, okay? And then to cut another 25 in December. All right. They still on the pipeline because they were looking at 100 to 150 basis points cut for 2024, especially on the Q4. Still pretty doable in my opinion. But anyway, so before the USA CPI release, stronger than expected, we were having a 50 basis point expectation. Why? Because if we look at the data here, as I say, the last 2 months was exactly the same, no changes. So usually the central bank takes a look at the last, takes a look at quarterly, right? And we've seen it quarterly that they haven't had much inflation into the economy. But we're expecting now a higher retail sales. So with a higher retail sales, this will probably continue to move higher. Of course, strengthening the US dollar. So I'm really interested to see what will happen with this. But anyways, so moving ahead. So we had a 50 basis points priced in for the month of November. They've changed it. Okay, they've changed it to a 25. Does anyone know why? It's a very simple question. Does anyone have a clue for what reason that happened? No? Okay. So the reason is pretty simple. Market works at expectations. Okay. So there were an expectation of X, Y, Z, but these expectations haven't been met. So what will happen? We won't do that, what we were expecting. Okay. So if the inflation was to come lower or as expected, then the Fed would cut 50 basis points. As the inflation came in higher, the Fed won't be able to cut 50. They will have to cut 25. So that's exactly what is happening right now. 88.2% of the market is pricing a 25 basis points cut. Just remembering that the current target rate is at 4.75, and they're expecting to cut from 4.5 to 5.75. Sorry, 4.5 to 4.75. Okay, so a 25 basis points reduction on the rate. And this will lead to a stronger US dollar, right? Because it's pretty simple. Taking this way, you are expecting something really bad to happen, and that really bad thing doesn't happen that bad, right? It comes in to be okay, good. So it's exactly what is happening with the rates right now. They were expected to cut 50. A 50 basis points reduction into the rate would be really bad for investors seeking higher US bonds, higher bonds around the globe on G10 economies, or, you know, we can't compete with emerging markets because emerging markets always have like those 13, 14, 20% really, really huge ones. But as on the G10, space, we can sort of look at it and see like, yeah, we are looking at a 25 now. We're not looking at a 50 basis points reduction anymore. So that's pretty good. I think we can continue to hold some US dollars, and we don't need to, you know, close those positions and move our money out from another safe haven or to gold. Okay. So yes, a higher CPI will influence the US dollar positively again. So pretty much all the scenarios that we have at the moment is positively affecting the US dollar. It's a bullish scenario for the US dollar. So my contingency would be continue to long US dollar until we see any other part that says, no, this is not what is happening, or moving to another currency. So it's still my trading system long US dollar, you know, backed it up with weaker currencies. That is euro as well, one of the other currencies, and Canadian dollar as well. Okay, again, monetary policy on the Canada is weaker than USA. So that's pretty much it, what I have for today. I think could cover everything. Does anyone have any questions besides the CPI, besides Kamala Harris, or Trump election and how this always influencing the Forex market. Thank you, Stuart. Not a problem. All good. Always very good to have you here. Yeah, so if no one have questions, just going through everything again, what we've just looked at it. I'm just open it again. So we had a look at what would happen if the Trump or Kamala Harris wins. If Trump wins, we would get a stronger US dollar just because he's more pro-business, more into manufacturing his own things and not trying to import other currencies and making those other currencies stronger. If Kamala wins, she will have to tax more to pay those benefits to the government to make those programs, ESG and etc. So if Kamala wins, US dollar will be bearish. A higher CPI makes a stronger US dollar. Yes, it makes a stronger US dollar because investors continue to hold US bonds. Therefore, the Fed won't cut 50 basis points, it will cut 25, continue to be stronger. And I've answered everyone's questions. So I hope everyone have a beautiful week ahead. I see everyone back on Thursday from 5 to 6 p.m. And yeah, thank you so much, guys. Have a great day, and I'll see you next one. Bye-bye.